Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets, they're lower in trade as we speak, and that's primarily on account of some trade war concerns.
Market structure is buy on dips unless proven otherwise. You'll have to respect that. There's a bit of a resistance at 11,500.
RBI Council pleaded that JPA be taken to the NCLT. So it's very difficult to believe that, the out of NCLT settlement will happen. Well, there goes the opening bell, and the opening is as flat can get.
If one needs to be overweight as a theme, barring private sector banks and financials, I think it's going to be consumption.
The NCLT holding that the bar under 29A, which has been a subject matter of a huge amount of debate, that bar, neither does it apply to Tata Steel in case of Bhushan Steel, nor does it apply to Vedanta as far as Electro Steel is concerned.
Nifty is just about consolidating at these levels with a little bit of a negative bias.
If the court decides on a special dispensation for power, immediate short-term good news for banks and power companies, but it can't last long because the Reserve Bank is bound to appeal.
25-point cut on the Nifty is what we have, and it's been that way from the word go.
No. That wrap actually doesn't do justice to what's happened in trade today. In the last 10 or 15 minutes, really, Nifty, Bank Nifty and SBI, just see these three charts. And what is interesting is SBI in particular has almost acted like a bit of a small cap stock here. That's the Nifty Bank, of course. That's SBI. Had a big intraday rally, and that's part of that is getting sold into perhaps, this is just my reckoning, people booking profit. It's almost like a program trade. SBI came with loss. There's a massive buying after that, and then the internals flashed, and of course after that you've seen stock also cooling off a bit. Of course, there are other numbers also which are reacting to, other stocks reacting to numbers. In general, today's stocks have reacted negatively to earnings. United Breweries is a classical case today in point. Surabhi, hi, good afternoon.
Good afternoon, Anuj. So many numbers to react to. We still have to go through what GAIL has done, what Hindalco has done. But before we can do that, SBI is really the stock of the moment. The slippages, just to recap the numbers, the gross slippages number of 14,300 odd crores, that has come in maybe, not as low as what people would have liked. It's still half of the 32,000 crores they did at the end of Q4. But I think, Anuj, maybe more people sort of want some more detail about whether it's really over, whether this rally is going to build from here on, the corporate bank rally.
Okay, let's, I hope, things are really simple. Fresh slippage, gross slippage, and, the P&L comes and the presentation comes. Sometimes there's a gap. All numbers should come out at once.
Yeah.
Let's just end this. And in between, the way the stock is reacting, it's just crazy, Surabhi. But anyway, for whatever it's worth, that's how things are. Before the SBI presser starts, let's just get in the fresh strategies at this point in time. We have Ashwini joining us for that, along with and Rahul Mohinder, of course. Ashwini, good afternoon. So that this move has played out on SBI and Bank Nifty. Book profit here, or you reckon there could be one more wave on the upside? Your thoughts?
See, strangely, you people are not talking about European markets. I think SBI is over. Now we have to see, do we react negatively to European markets? I think we will do that because anyway, we are kind of overstretched. But for whatever it's worth, assuming that SBI comes out and says that everything is fine, that way you can still buy SBI with a stop of 315 and look for targets of 335. ICICI Bank is a buy with a stop of 324, target of 340. BOB is a buy with a stop of 145, target of 163. But if you ask me, the day is done, and maybe by end of the day, you could lose whatever Bank Nifty has recovered from the lows, because Europe is looking fairly precarious.
Okay, Europe is looking precarious. Rahul, I'll come back to you in a bit. Let's go across to the SBI presser.
Elements need to be kept in consideration. But otherwise, the performance of the bank on all fronts has been very satisfactory. NII is up by 23.81%. But if we exclude one-time impact of recovery in two major accounts, the increase is 12.85%. So there is a growth in net interest income. The NIMs have improved. Domestic NIM is now 2.9, 2.95, which is up by 27 basis point. But again, if we exclude one time item, then still it will be around 2.8. 2.78, 2.8, around 2.8. These are all I'm giving just approximations. Other income is up by 27%, and this is excluding the treasury. Because treasury, because of the yield movements, there has been some negative growth, and there was a switch from AFS to HTM. So that impact of nearly 2,000 crore is appearing in the above the line profit figures. So overall performance, if we look at, it has been a very good quarter, I would say, but for some of these variables. Asset quality, which is the favorite, always I say, of the media. So there has been again a very good recovery, I would say. The non-performing loans have reduced by 10,587 crore. There was a recovery and upgrade of 14,856 crore during the quarter, and last year for the whole year this number was less than 14,856 crore. This is of course helped by as I said, that recovery in two large accounts, but the GNPA ratio is now 10.69 as against 10.91, and net NPA is 5.29, which is again a function of increase in PCR, and fresh slippages is 9,984 crore. Many of the accounts, even if after classified as NPA, are operating accounts. Even service standard accounts are NPA accounts, but we don't stop operations in those accounts. Because of that, in the existing accounts, there has been an increase of about 4,400 crore. So that's why that the number looks at around 14,500 crore. But I think the number which needs to be looked at is the fresh slippages, which is very much in accordance with the guidance which I had given at the time of the year-end earnings call, that our fresh slippages will not exceed 2%. So it comes to 1.95%, and the variation in outstandings in respect of the existing accounts will always be there. The credit cost has come down to now 2.55%, and again our guidance was at around 2%. So we are very much on that target. As I said, that first quarter we have made some aggressive provisions to increase the provision coverage ratio. That's why the credit cost looks elevated at 2.55%, but there is a huge improvement as compared to the previous quarters. The growth in domestic advances is 7.25%. The overall growth is lower because of two factors as far as the international banking book is concerned. One is on account of the buyer's credit which were being given against LOU. So there is an impact of almost about 45,000 crore. And we carved out a subsidiary in UK, so another 10,000 crore has been transferred to the subsidiary in UK. So again, the growth performance as far as business is concerned, and particularly on the advances side, has to be viewed in light of the international banking book, where these two have impacted. On the liability side, the CASA franchise and particularly the savings bank franchise, again a very good growth. The savings bank deposits have grown by 9% YOY. Again, this performance has to be viewed in light of the fact that last year after demonetization the growth was 27%. So if we average out, then it becomes almost 15 to 16% annualized over 2-year period, and savings bank deposit for the first time for the bank has crossed 10 lakh crore figure. So not a mean achievement to have that kind of savings bank growth. And overall, the CASA has gone up by 69 basis point year-on-year basis. All our subsidiaries, they continue to perform very well. And as I said, that be it the growth, be it the asset quality, be it the strengthening of the balance sheet, which has been the strategy, that rather than focusing on what the quarterly numbers look like, the emphasis has been on strengthening the balance sheet. And if you compare as previous year, YOY, the provision coverage ratio has gone up by nearly 900 basis points, and without OCA, the provision coverage ratio has gone up by 1100 basis points. So it is now the provision coverage ratio is 53%, and if you look at the corporate book, if we look at the provision coverage ratio for NCLT, so they all are now in a position where overall book, we are almost aligned what we call the loss given default. So our PCR is now fully aligned with LGD as far as the corporate book goes. And NCLT 1 and 2, definitely we are sitting on some surplus. NCLT 1, we have provided fully for all accounts as per what was required by the regulation, as well as in line with what is the estimated recovery. And one account alone, we are expecting that as and when it gets resolved, the bank will get almost 4,000 crore recovery. That is the estimate we have. NCLT 2, we have a provision coverage ratio of now 79%. So that itself, even if presuming that the recovery will be 30%, even then we are sitting on a higher provision as far as NCLT 2 is concerned. So whatever angle you look at, the provision coverage ratio or what could impact the earnings in the coming quarters, all has been absorbed by June. On the asset side, again, in September, we intend to further improve the provision coverage ratio so that from December onwards, there will be no looking back, and there will be no hangover of the past credit costs. So that is where the entire strategy is around, and this strategy is yielding very good results for the bank. So these are my opening remarks, and open to questions.
One by one.
One by one, please.
How many of these, good afternoon,
Yeah.
from BTVI. So how many of these fresh slippages came from the watch list, if you could give us an idea?
91%.
91%. And the ones that came from outside the watch list, can you
This is just very nominal. 9%, so you can take 1,000 crore outside watch list.
See, out of this 9,900 crore slippages, corporate slippages are only 3,704 crores. That's a very small number, and 91% is from the watch list. This 3,700. The rest is retail slippage, agriculture, SME.
Yeah, and first quarter always the retail is elevated. Going forward, the retail slippages will come down, and first quarter in agriculture particularly, it is all in the state of Maharashtra and Karnataka. Everything. So basically, I have in mind that some of the power assets, 7 of them, so we are trying to resolve in within this month, or you may say within this quarter. So when that happens, then your provisioning gets advanced. If it is in NCLT, you still get 9-10 months to provide and whatever is the final outcome. But if we resolve them, then whatever is the gap between the provision held and whatever is the estimated recovery, so that will need to be provided in September quarter. So that's why, like I'm saying that, yes, absolutely. The PCR, if you look at the corporate book level, it is, as I said, that it is aligned now with the loss given default estimates. So we don't have to. But still, as I said, that power sector, because we are in very advanced stage of resolution, in respect of these assets, we have the clear idea that what are we going to get and what is our provision.
Fair to say that there would be no incremental provisioning going forward, be it for the stressed power assets that you talked about?
For stressed power assets, it will be. but I am sitting on surplus in certain assets. So that's why you have to look at the portfolio level. If you look at the overall portfolio level, there is no sort of any additional burden. Normal slippage, normal provision goes up because of two reasons. One is the aging provisions and one is the security if it gets diluted. It is not for the bank. It is the figure is about 3,500 per quarter, and this is there are account specific provisions. So power, if I resolve 7 accounts and if there is a gap, that gap I will have to provide. But there, as I said, that I am sitting on excess provision as far as NCLT 1 and NCLT 2 is concerned. So there may be timing difference. Suppose I get the resolution for the account which I am referring to in this quarter, then it will offset my entire provisioning requirement for power. But if power in any case, because we are resolving, so I have to provide. It may so happen NCLT 1 may happen next quarter. So we have to keep that timing difference in mind. But overall, we have to look at the picture for the whole year. That's what I always say. That don't go on quarter basis. That is not what I look at. What I am looking at is what will happen during the year. And if I look at what will happen during the year, the requirement for provisioning on account of the NP account or the legacy NP account, we have now largely taken care of. Yeah, Ritu, can you use mic? Yeah.
So I just wanted to know, you said you were going to be in touch with the regulator to extend the deadline for resolution for these power assets so they don't have to be sent to the NCLT. Have you heard from RBI yet?
No, we have not approached yet.
Why is that?
So if I don't need to, then I will not approach. If something happens before 28th August, so there is still time. So we will approach if required. But if we can manage without approaching, I will do it without approaching.
So do you have an outlook on the power assets that you refer to? You said that there may be a gap provisioning and therefore you will have to provide. Do you have an estimate of
Absolutely. We have the because these assets for State Bank of India, they are about 17,000 crore. I have already provided about 40% on the power assets. So if you look at our estimated recovery on these assets is 50%. So my estimate is that for this 17,000 crore, the requirement will not exceed 3,500 to 4,000 crore. And that is what we expect to recover from NCLT 1 account. But timing difference, as I said, all the provisioning or what I call all the pains, all the blows, we are taking upfront. And we are not leaving anything for the future earnings. We should remain protected against whatever is the past. And that is where we have advanced quite a bit. And in June, we have almost covered our flats.
Last quarter, you mentioned that you would be lending a helping hand to some of the banks which are facing PCA. Now, this quarter, you've seen some growth on the corporate loan book. Is a lot of that coming from there, or are you also pushing your own?
No, growth is largely still coming from retail, but we have a fairly good, robust pipeline as far as the corporate is concerned.
What I wanted to know is that from the PCA?
No, not exactly. As far as this growth is concerned, I don't think there are any takeovers from the PCA bank as yet. But if any customer approaches us and if we are comfortable with the risk profile and we are comfortable about the future of that particular enterprise, then we don't mind or hesitate in taking over some of the loans from PCA banks if they are unable to help in those particular accounts. But as I had mentioned earlier also, it's not with any intention to compete or take over those loans. It will be if necessitated by the client requirements. But ultimately it would also depend upon that how much comfort we have on a particular client.
Speaking of the corporate sector, where exactly are you seeing demand trickle in from any particular sectors? And if you could give an idea of what the pipeline looks like in terms of projects and even in terms of investment that is being lined up?
A lot is happening. You are aware that NHA itself, we have sanctioned a loan of 25,000 crore. So that money definitely flow into the road sector. And similarly, there are many central government undertakings which are in the market for borrowings. And
Okay, so the meat of the press conference is out, I guess. Now, look at the intraday chart of State Bank of India stock, and it's telling you a bit of a story here. Today, what you've seen is essentially market positioning play out, because initially there was a net loss number, market became short. After that, there was explanation that a net loss came from the mark-to-market losses, which have been entirely provided for. And now you have the SBI chairman also saying that they have provided for anything that could hit them in the near future. After that, of course, we saw that massive rally in the stock. Keep in mind, this stock has had a one-way rally from 240 to today's high of somewhere around 320, and now you're seeing quite a bit of profit taking. SP Tulsian of sptulsian.com is with us. Mr. Tulsian, good afternoon. Your thoughts on SBI's numbers?
See, Anuj, I've been seeing the price behavior of the stock, post these numbers, and sometimes I wonder that can we just keep our focus only on the fresh slippages or the net or the total slippages of a stock like State Bank of India? Definitely, that's a very narrow way of interpreting the results. Now, if I come onto the numbers, honestly, I don't see anything attractive, but I was amazed to see the stock moving up by 3% at some point of time till we got all the data with us. Now, those things happens, when the stock is either, in the strong hands on the long side or on the short side. And that is what we have seen, that probably the long people, have tried to pull the stock, giving the impression that the results are seen to be quite good, which in fact are not. Now, if I just quickly go through, if I just first start with the operating profit, it is at 11,009. That's how I analyze the number. Operating profit 11,973 against 11,874 of the previous quarter, previous year. I am not taking on a sequential basis, which is more logical, which was at 15,800 crore. That means your operating profit was much under pressure. Whatever NII, everything got booked into that. Now come on the provisions. Again, provisions have seen, even excluding the treasury operations, treasury mark to market, the provisions have been quite high at 13,000 crore. Come on profit before tax minus 7,255 crore. The tax credit, which is a deferred tax credit, is just a book entry. You cannot have even the reversal of the earlier tax paid. So this is a non-cash item. So loss is at 7,255 crore. Come on retail EBIT at 1832 crore against Q4 of 3,587 crore. That means the retail segment has shown huge pressure, where the EBIT has fallen by about 1,900 crore. So I'm unable to understand the anything positive. And if you really see the management commentary, everywhere the PCR and the provisions have all been talked of NCLT 1, NCLT 2. That means you are playing a 2020 game or maybe one day match where you have a stiff target in the defensive way. This is not the way of just protecting the making the provisions and seeing all these things. So honestly, the view which I've held in the morning, taking the technical factors, that stock is due for corrections, and these results are not seen supporting in any way. And I maintain my same view that the stock is going to see the corrections, if not on a real-time basis, maybe in this week itself, ahead of the next weekly open option expiry.
Okay, fair point, Mr. Tulsian. I take your point. Now let's address the story which is flashing on the screen. Just to put this in context, this is referring to the state of Jammu and Kashmir. But why this is important is because this could set a bit of a precedent for the Bombay case as well. The Supreme Court has stayed the J&K High Court decision of allowing outside food in cinema halls. Yash Jain now joins us with all the details. Yash, tell us what all has happened.
Well, Anuj, really interesting development as far as the case of allowing outside food in multiplex is concerned. The Supreme Court, Apex Court, has stayed the order of Jammu and Kashmir High Court, which was passed on July 25th, allowing moviegoers to carry their own food when it comes to these multiplex. Now, essentially, of course, as I said, it was an interesting order and which had some interesting arguments coming from Mukul Rohatgi, who was the counsel for the Multiplex Association of India. He said that allowing outside food in multiplex will lead to a complete breakdown of these private entities. He also said that Jammu and Kashmir High Court has ignored all the aspects about safety, about hygiene, before passing its order on allowing people to carry their own food. Also, he said that it's completely impossible for any multiplex to really check and scan all the bags when it comes to this food from the security aspect of it. In fact, on a rhetoric note, he also asked the court whether he should be allowed to carry his own whiskey to a restaurant or a hotel and order soda from there. So all in all, the court, prima facie, taking all these arguments and putting an interim stay as far as that particular Jammu and Kashmir High Court order is concerned. They've asked the petitioner to file a counter affidavit when it comes to Mukul Rohatgi's arguments, and the case will be heard again after 6 weeks. as you interestingly mentioned, the other aspect of this is that it will also have an implication on the Bombay High Court case. Of course, the Jammu and Kashmir High Court order was taken as a reference point and was mentioned by the PIL Council in Bombay High Court to allow people of the state of Maharashtra also to carry their own food in multiplex. And now, with this Supreme Court order, the Bombay High Court will also factor that particular order in before passing its own order. But of course, a slight bit of positive for all the multiplex companies as it opens the FNB, the food and beverage revenue stream from the state of Jammu and Kashmir.
Oh yes, so state of Jammu and Kashmir might be small here. Yes, thanks a lot for that. But the point here is that,
it could be a huge precedent, I guess.
It could be a bit of a precedent here. And the Supreme Court.
Yeah.
And, and these are decent observations, I would say, that, at the end of the day,